Hello world, I'm Angarlo. Today let's talk about the rate cuts that took place by the Fed last week. It is the first time since the COVID 2020 pandemic that the federal government, more specifically the Federal Reserve or the Central Bank of the United States, decides to cut by 50 basis points, or in other words, 0.5%, the reference interest rate that they have. What this means is that essentially in their assessment, they think that the economy has controlled inflation. Now, it's funny because they themselves control some of these statistics and some of the things that dictate what constitutes the products that calculate inflation. But regardless, according to their assessment, inflation has been under control now. And now that unemployment is rising, now obviously that the country is in debt and needs to restructure its own debt. And now that we're getting into elections, it is finally time to start cutting rates. And it means that basically the entire economy follows suit, and banks and lenders basically need to adjust their interest rates in accordance to what the government is doing. So that will mean that all of a sudden it will be easier to borrow money, or at least more attractive, and it means that basically more money is starting to get printed. What that means, more money in circulation, same amount of assets, well, it means that there is more money competing for the same assets, and that means that the price for those assets typically rises to basically compensate for that introduction of additional supply. So let's see what happens with real estate. Let's see what happens with Bitcoin, with securities like the stock market. But in the meantime, just be aware that it's going to be easier to borrow, and the money printer has started to print money. So follow me for more and learn what is going to happen.